accountants, janitors, drivers, and the hot secretaries. It's 100 people total. 100 people made $13 billion in a year. That's an average of $130 million per person. Even counting the cleaning lady and the security guard, they made $130 million a head. It is currently the most profitable company on this planet, bar none. What about USDC, the runner-up? USDC is totally transparent. According to SEC disclosure filings, it's even more precise. As of June 2025, mid-year, the circulating supply of USDC exceeded $65 billion. Tether is at $150 billion, but this one is climbing fast at over $60 billion. It has firmly secured 25% of the global stablecoin market. Tether has 64%. USDC has 25%. You ask, Old Wang, is there anything left? Not really. The model student and the thug have basically carved up the world's stablecoin market between them. Circle's USDC profit model is much simpler than Tether's. Very simple because they are the model student. They don't do AI balancing or outside investments. They just buy us treasuries. That's the whole game. I take the money and park it at the US central bank. They eat the interest. The annual yield is currently 4 to 5%. Because their liquidity is so good, 2 or 3 month durations, they can always redeem 1 to -1. Circle promises full payouts, so you don't have to worry. Circle's business model has almost zero overhead. If Tether needs 100 people for $150 billion, Circle probably only needs 20 because they don't even do anything. They just deposit it in the bank. So isn't it just an interest collecting model? I take your money, don't pay you anything, and then I put it in the bank to collect interest. I'm just eating the spread. From 2020 to today, USDC's profit skyrocketed from $15.4 million to $1.7 billion in 5 years. Over 5 years, this company has been like a money printer, growing 110 times over. And the source of income, while Tether does this and that, USDC only has one source, the interest rate spread. I put money in the bank and collect interest. Essentially, USDC is a risk-free interest printing machine. It is extremely sensitive to interest rates. So, if you buy Circle stock, you might see it suddenly tank. It will definitely tank on the day the Fed cuts interest rates. You get it, right? Because they live off the spread. The higher the rates, the higher their income. Once rates drop, their income drops, so their stock price will be affected in the short to medium term. This makes Circle an incredibly precise investment proxy for the Fed's rate hikes and cuts. Combined, Tether and Circle, $150 billion and $60 billion, make up over $200 billion. So how much is the total global stablecoin market? As of today, it's $280 billion. USDT is 64%. USDC is 25%. And the rest make up a little over 10%. So, to study stablecoins, you don't need to understand blockchain technology at all. It has nothing to do with blockchain. Honestly, you guys in this industry, don't you know what's going on? Where is the blockchain? It's more like an accounting firm. It's more like the old school fund pools. They issue their own game coins, gather the cash, put it in a bank for interest, or sneakily invest it in quick projects to make a buck. That is the essence of stablecoins. There are two massive blue oceans for stablecoins. You might ask, Old Wang, is the craze over? Number not even close. If it's this simple and brainless, why do I say it's the future of humanity? I'll tell you. First, legitimate cross-border trade payments. Normal trade is opening up a blue ocean for stablecoins. Previously, central banks and governments didn't allow it, so clean businessmen were afraid to use stablecoins or were at least skeptical. They didn't want to use USDT or USDC. They preferred traditional banks, like Alibaba overseas. They still want you to wire USD California D or ORD so they can settle it into RMB. That was the case until at least 2022. The use of stablecoins in white market trade, transparent, legitimate trade, was basically zero. You ask, Old Wang, where did those hundreds of billions come from then? Underground trade, man, the black market. But now, white market applications are starting. As the US, EU, Hong Kong, Singapore, and Korea open up, stablecoins will rapidly appear in legitimate trade. Right now, we're already seeing $50 billion a month. At this very moment, legitimate stablecoin trade on this planet is at that volume and growing at light speed. So how big is total global legitimate trade? I'll give you the ceiling, $200 trillion. If half of that $200 trillion uses stablecoins, you'd need $100 trillion in transaction volume. If it's 75%, it's $150 trillion. Right now, it's only $50 billion a month, or $600 billion a year, $600 billion versus $200 trillion. Can you imagine the gap? Even a 1% conversion rate would be a massive, revolutionary push for the industry. That's why I say keep an eye on Circle. It's worth watching. This is why companies like Amazon, Walmart, JD.com, Alibaba, and Ant Group are all itching to get in. These companies have nothing to do with crypto. They are trade companies, retailers, and e-commerce giants. Why are they at the front line of stablecoin layout? This is the reason. They see the same blue ocean we do. Once you move from the black market to the white market, USDC's growth potential is way higher than USDT's. In the white market, you don't need to hide, and you can't hide anyway. But why use it? Because it's fast. You use it, I use it, and we don't have to go through the bank and deal with the SWIFT network. Number 3%, 5%, or 10% fees eating us alive. So that's the first massive blue ocean. The second massive blue ocean is Old Wang's demand. You might say, Old Wang, do you really need stablecoins? Damn right I do. Look, right now I'm harvesting you guys in the White Road Club. Nobody has a problem with that, right? It's a willing buyer, willing seller situation. Oh, someone just tipped me $100, Heaven's Wheel of Reincarnation. Thank you. I wish you wealth and a great sex life. I missed you earlier, sorry about that. Thanks for the $100 anyway. What's my headache? A lot of guys in Argentina are joining my club. The Argentine peso is devaluing like crazy. 2 or 3 years ago, Google set the price based on $100 worth of pesos. Now, the peso drops 30 or 50 times in a year. After 2 years, their payment is only worth $3 or $4 to me. I'm losing money because it devalues every single day. That is my demand. I need stablecoins. And the people in those shithole countries need it even more. People in Argentina, Brazil, Nigeria, Turkey, Moscow. Anyone whose local currency is tanking, who wouldn't want USDT or USDC? Who wants to use the Argentine peso? I work hard all year to earn a bag of money. And by next year, that bag of money is only worth a bag of toilet paper. People in these shithole countries truly need stablecoins. This demand is just as big as the first one. At least 1/3 of the countries in this world are shithole countries, unqualified nations that have no business issuing their own paper currency. With the advent of stablecoins, these bastard governments can finally get lost. As long as the people have a smartphone and no firewall, and these shithole countries don't have firewall tech. Only big countries like China or the US can pull that off. Small-time countries like Nigeria, Venezuela, or Argentina don't have them. So the people are free. They just download an exchange app and use it in a coffee shop. I'll buy a coffee with you USDT. The owner loves it. Great, if you pay in U, I'll give you a 40% discount. This is exactly what is happening right now in Brazil, Nigeria, Turkey, and Argentina. Countries suffering from inflation because their central banks have failed and are cruelly harvesting the people. All foreign exchange gets settled into their trash paper currency. Naturally, the people and the private sector turn to stablecoins. They don't care if it's a dollar stablecoin or an RMB stablecoin, any stablecoin works. But they don't have a choice. There are only dollar stablecoins. So, stablecoins are starting to go mainstream in these countries' private sectors. What do these governments do? Their first reaction is to ban it and arrest people. But can you arrest everyone? These countries are usually democracies. You can't catch them all. So what now? Since they can't block it, they've done a 180-degree turn. They've given up on blocking it and are lining up with the US. In countries like Brazil, Argentina, Venezuela, Turkey, and Nigeria, you can now legally use stablecoins to pay for things. You can rent a house, buy coffee, or eat out. The demand is astronomical, nearly $1 trillion globally, with $200 trillion in global trade and over $1 trillion in private demand from shithole countries. The current $280 billion in stablecoin issuance hasn't even hit the ceiling yet. In the last 5 years, stablecoin issuance has exploded 20 times over. But its market cap is still only 1/10 of Bitcoin's. If we look at the world with a dynamic, predictive eye, stablecoin surpassing Bitcoin, or even surpassing actual US dollar cash transactions, is just a matter of time, especially with the backing of the US government. Since the US doesn't oppose it, its development will be even more stable. That's our optimistic prediction, and it's based on data. Even though it's only been 5 years, stablecoin trade and settlement have already surpassed the total transaction volume of Visa and MasterCard combined. Now that we've talked about the great potential, are there weaknesses? Yes. First, the biggest threat to stablecoins is the reliance on human rationality and luck. Humanity must remain stable. We must stay absolutely rational. No nuking each other. No massive power grid failures. And we need luck. No asteroids hitting the US or cracking the Earth. If that happens, gold won't die, but everything based on computers and electricity will. Bitcoin and stablecoins share this risk. Second, it relies on management companies having a limit to their greed. This is a test of human nature. We don't have to worry about USDC. They've already passed the trial. But those 4 kings at Tether, those 4 guys running that makeshift stage, better not make the same mistake as that exploding hair kids, BFDF. USDT accounts for over 60% of the market. If it collapses, the trend might not change. But man, everyone will be crying their eyes out. And they're in the Virgin Islands. You can't catch them. The third weakness is the reliance on the tacit approval of superpowers and central governments. We have the US's approval, but not China's yet. If China, the EU, and the US all give the green light, then it's truly springtime for stablecoins. Currently, the US-China rivalry is playing out. I define this stablecoin rivalry as a new currency war. In this round, China is performing far worse than the US. Trump's America might be unconventional, but it's very united. The White House and both houses of Congress are now basically under Trump's control. Even if the country goes down a slanted path, it goes fast because everyone is on the same page. Meanwhile, China is facing internal power struggles. It's back to the state of infighting and constitutional maneuvering seen before the 18th or 20th Party Congresses. Because of this, the Chinese economy is in driverless mode. China's central bank, stock market, and bank officials, from high to mid-level, are all lying flat. In this new currency war, the US Genius Act Fit 21 is the only main axis of the world. China originally had a massive advantage in this area, way bigger than the US. Why? Because the world is de-dollarizing. Everyone knows the US's hard power is shrinking. Whether it is Biden or Trump, they can't stop the US from getting weaker by the day. The world is moving toward multipolarity in this process. China had a much stronger foundation for stablecoins. Why? Because most things in the world are made in China. As I said on day one, stablecoin logic is based on trade. The US has high trade demand, but they don't produce anything. The source of all wholesale trade is here in China. So, doing stablecoins here has massive potential and advantage. Second, China has way more talent and experience in technical application than the US. The US is at zero. China's Alipay overseas payments and Yuebao are stablecoins. They are stablecoins based on RMB. Can you argue with that? Is the money in Yuebao real RMB? Didn't Jack Ma move that money a long time ago? It's a stablecoin. And this model has been running under the Chinese regulatory system for years. You don't need some sandbox trial in Hong Kong. Not at all, but it's driverless. No one is responsible, and they don't understand it. They're like a toad at the bottom of a well. Because they lack the vision, they are being extremely conservative and passive. They've even fallen behind South Korea. Did you know that? On the stablecoin issue, China is behind Korea. What a joke. If we got overtaken by the US, fine, but how did South Korea beat us? They don't even have a hand in the digital currency game, or Singapore. So the Genius Act Fit 21 defines several key points. We can only look at the US Act. I believe if China plays catch-up, they'll just copy this act because China is a fanboy of the US system. The stablecoin part of the act is simple. First, you need a license to issue stablecoins. This is easy to understand. We can't have just anyone issuing them. You have to fill out a form and go through a process to get a license. This is reasonable. It's how the US does it. And China loves licenses, so they'll copy that for sure. The power to decide who issues them returns to the center. Now, it hasn't been specified which government body decides. Is it Trump? Wait, who is this Little Jiang? Why is there some bastard named Little Jiang in here deleting my White Road Club members? Are you crazy, Little Jiang, deleting my guests? Tom and Jerry said it right. Little Jiang, I'm warning you. If you delete one more person, I'll take your little white wrench away. You are rebelling, you bastard. I'm going to find the admin team tonight and get Little Jiang out of here. Apologize right now. Guarantee it won't happen again. Anyway, Tencent's Qcoin is actually a stablecoin too. It's all the same. Anyway, I bought Circle at $113 and sold at $130. I sold too early. Well, that's fine, as long as you made money. The Fed will cut rates again, and it'll drop again. Our show is about long-term trends, not day-to-day fluctuations. All right. So, will stablecoins be regulated by the US federal government or state governments? It's not settled yet. I'm actually quite excited about this. If state governments decide, I'm telling you, go to Delaware immediately. Delaware is the poorest state, or go to Nevada or Arizona. You'll definitely get a license. Then you can issue your own coin. You don't even have to issue a US stablecoin. You could issue a Chinese stablecoin on behalf of Xi Jinping. Just letting the imagination fly there. On regulation, the current US policy defines specific regulatory bodies and processes. Third, it defines specific liquidation procedures. They've already thought about what happens if a company fails. They're good assets. Like the treasuries they hold, cannot be used to pay off the company's own debts if they go bust. They must prioritize paying back the coin holders. The value stays with the coin, not the owner, no matter who holds the coin if the issuer fails. You get paid in USD to ensure you don't lose out. All of this needs to be codified in law. Without law, you can't rely on people's conscience. If I'm going bankrupt, I'm going to pay off my own family's debts first. So the Act also defines information disclosure, quarterly reports, monthly reports which firms audit you, what triggers anti-money laundering AML checks, and what counts as reserve assets. What you can buy and what you can't buy are all detailed. So it'll be easy for the Chinese central bank to copy.